Historically, the next 2 months have been the best for Solana. What we see over here is Solana's outperformance relative to Bitcoin by week of the year. The yellow highlighting is where we are today. The last 2 weeks have already been very bullish. Just have a look at Solana relative to BTC. We did outperform nicely, and except that one outlier. The next 8 weeks look very bullish as well. If you followed that exact strategy, if you knew already that pattern at the very beginning when Solana started trading, then of course you would have outperformed nicely. But of course we couldn't know this beforehand. However, what I still like about this chart is that the seasonality tends to be a relatively constant trend. In other words, this is not something that just made money in the early days. It's a structure in the price data that's prevailing over time. Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I hit my first million 3 years ago, and it is mainly through active trading of cryptocurrencies. If you want to see my track record with all the trades that I've made, then feel free to check out the pinned comment down below. Now in this video, I want to talk about an advanced concept called return autocorrelation. Again, we look at Solana relative to Bitcoin. The idea is the following. We want to figure out how much does past performance correlate with future performance. Because there's this saying, right? Past performance is no indication of future performance, but that's usually used as a disclaimer. In this video, instead, we want to figure out, is there maybe a connection? Is there maybe some kind of connection with what happened in the past compared to the future? And on what time window is there a connection? Let's say the last week's performance, how does this connect with the next week's performance, or let's say last year's performance? Is there some kind of correlation with the next year's performance? What's the best time window? How high is that correlation? And can we use this potentially figure out where Solana is headed from here? So that's what we are doing in this video. This comes, by the way, from Bitcoin Strategy Analytics. This is the backtesting platform of this channel. Every single backtesting mechanism is also explained in a dedicated tutorial video, but we are not going into the details of running the individual backtests here. I don't want to go through all the parameters. Instead, I want to show you the results. So we've got 2 dimensions over here. The x-axis shows the past performance. The y-axis shows the forward-looking performance. So what we're doing here is we have our time window that we split into 2 halves, and then we roll this throughout the entire history of Solana's performance relative to Bitcoin's performance. And then we see there is negative correlation. So what does that mean? When in the past we had very poor performance of Solana relative to Bitcoin, it tended to subsequently outperform. And vice versa. If Solana performed very well versus Bitcoin, going forward, it tended to underperform. Now, every single data point is one observation, and the orange line, that's the regression line. And what we've got highlighted over here, that's where we are right now. So Solana underperformed in the past and is now likely going to outperform going forward. Now note how this line does not perfectly fit on the data point. There is some noise here, right? This is just a model. This does not explain all of Solana's price variations. But at least it is a relatively straightforward connection, right? It makes sense to still look at this. Now have a look at the labeling of those axes. It's 1 year, 14 weeks, and 3 days, both for the past window and the future window. So when we talked about should we look at last week's versus next week's return, or at last year's versus next year's return, what this is looking at is a very specific time window. 1 year, 14 weeks, 3 days in the past, and 1 year, 14 weeks, 3 days in the future. Now, why specifically that time window? That's because of the following chart. What we've got on the y-axis, that's the R squared. What we've got on the x-axis, that's the time window measured in days. So this is now looking at where is the connection between past performance and future performance the highest? Is there a strong connection for the last week versus next week? Or is there a stronger connection between the last year and the next year? And when we optimize that, the very strongest connection with an R squared of 0.92, that's exactly at those 1 year, 14 weeks, and 3 days. So that's historically where past performance was the best predictor of future performance. There's not much of a connection just for 100 days or 200 days, but there is a pretty strong connection for 466 days. Let me actually show you what I mean. If we just look at the last week's return versus the next week's return, again, of Solana relative to Bitcoin, then we get this chart here. Now the data points are much more scattered relative to the regression line. And interestingly enough, the regression line here is positive. So there's actually a very, very slight positive correlation. If last week's performance for Solana was positive, there is a very slight higher likelihood for the next week's performance to also be positive, and vice versa. When last week was negative, next week tends to be negative as well. So there is, on the shorter time frame, a bit of a momentum effect here. What happened in the past is likely going to happen in the future as well. That effect already breaks down when we look at the last 30 days. So now we've got an almost perfectly horizontal line. It's slightly negative already, but there's definitely no momentum effect, no positive momentum effect at all on a 1 month time frame. Still, the R squared of those smaller time frames is very, very low. It's only high once our time horizon gets longer, once we get to 466 days. And then we get data points that are much more aligned with our regression line. Now, how does all of this number crunching help us? It helps us because if there is a strong connection between past performance and future performance, we can make predictions. We can figure out what is a realistic scenario for Solana relative to Bitcoin. Will it outperform? Will it underperform? And what can we expect? To what degree could it outperform or underperform? And so again, we've already looked at our data point today, right? Solana underperformed Bitcoin over the last 1 year and 14 weeks. And so it's likely going to outperform in the next 1 year and 14 weeks. There's no certainty. There's a spread around this line, but that's what our model tells us. And so here are the crunched numbers. Our predicted forward return is 45%. When we annualize this, because we're predicting more than a year, that's 34% per annum. We expect by the middle of October of next year that Solana will outperform Bitcoin by 45%. So the middle of October is over here, and 45% outperformance, that's over here. So our model predicts Solana relative to Bitcoin to hit this circle over here. Now, this is not predicting how we get there. We could shoot up and then come down. We could crash further and then recover. We could just go there very smoothly. That's completely unknown. That is not predicted by our model. Still, it tells us that in the not so distant future, Solana could do quite okay. And as we've already seen with the seasonality at the beginning of this video, especially the next 2 months seem to be positive. So that would imply quite a bit of an outperformance here. And again, what happens subsequently is completely up to debate. We are not trying to figure that out with the models discussed in this video. And so in the end, what matters most here is to have the proper risk management, to not be over levered, and to have the right allocation to the different asset classes. I actually made a dedicated cheat sheet just on that topic. The link is in the pinned comment down below. You can get that cheat sheet either via Telegram, so you click over here, or you scan this QR. Alternatively, you can also get it sent to you via email. It's 100% free, no payment is required, no credit card is required. Again, it's in the linked comment down below. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.